Hi, BraVoCycles is here, Sunday, November the 3rd. At the beginning of November, actually on November 5, right here, I posted a video in which I identified 4600 as a potential target. And SPX achieved that target in less than a month, and it's in the middle of the target range. It could still push a little bit higher, but essentially the target is satisfied. And the question is, what's next? Well, in the process of getting there, SPX crossed the forward line of demarcation for the 20-week cycle and generated target centered around 4,800 plus minus 120 points. And the question is whether SPX is going to reach that target. Well, for all practical purposes, it's already there, but it could easily reach it even maybe next week in first couple of days during very positive seasonality. First few days of each month have positive fund inflows. The bigger question is whether it could reach the upper range of the target area, somewhere toward 4,900, and what consequences it could have on market Elliott wave counts or SPX Elliott wave counts. But before we go there, let's review the sentiment indicators. Various sentiment reviews like CNN, Fear and Greed, etc., are in the greed territory, but not extreme. They could push still a bit higher. Here I'm showing American Association of Independent Investors sentiment survey. So yellow is the bullish line, and we could see that it's approaching July top, but it's not that extreme. However, the bearish line, the blue one, is at more than 5-year extreme. It's lower than at SPX peaks in early 2020 and 2022. So it's certainly suggesting that bearishness is disappearing, and possible at least yellow flag, or not, if not a red flag for traders and investors. Let me bring to your attention some other interesting indicator. This is a weekly SPX chart in the middle, and at the top I have the ratio of SPX over VIX. And when this ratio SPX over VIX is extreme, usually within days or weeks, SPX experiences significant correction. I mark here just last 4 biggest extremes, although it happens at lower extremes. So in 2017, beginning of 2018, we had extreme peak and market dropped sharply. That happened again at the end of 2020, end of 2019 and early 2020, which was pre-COVID top in the market. So we had extreme peak a few weeks, several weeks before the market top, and then one of the sharpest drops in the market history in terms of the size of the drop versus the time the drop took to evolve. Then we also had similar situation in 2022, extreme peak after a couple of months was followed by a significant correction into October of 2022, which was followed by a strong bounce. And again, in June, July of 2023, we had extreme peak that was followed by this last correction from July to late October. And now, if you look at the latest value of the weekly SPX over VIX ratio, it's larger than at any time in history. And SPX is approaching, with this relentless push from October, late October lows, is approaching July highs. And one cannot avoid the question whether with such extreme sentiment, VIX very low, actually VIX is approaching pre-COVID levels, and SPX looking bullish, whether we are going to experience a significant correction in SPX as in many past instances. Moreover, I would also like to point out the strong negative divergence in relative strength index, so-called RSI. Although SPX pushed to the July high, RSI is well below its value in July. Also on the hourly and 4-hour charts, we have very strong negative divergences in RSI and other technical indicators. And similar situation is with MACD. So technical indicators and sentiment, and especially this SPX over VIX ratio, and almost all price targets from cycles satisfied, alerts us to be ready for some kind of correction. And to elaborate more on that, let's go to this Elliott wave chart and examine some options and possibilities. My working assumption was that the January top of 2022 was at least a supercycle top, if not grand supercycle top. So my primary counts were brown and blue, suggesting that the correction into 2022, into second half of 2022, was an intermediate A wave, and that since then SPX has been developing a B wave, blue B or brown B, or perhaps there's also option of red bearish count. This was intermediate 1, and now we are completing intermediate wave 2, but that's essentially has similar consequences as these B waves. It's bearish. The only difference is that red wave is valid only up to this red line, which is January 2022 top, whereas B waves could even slightly exceed that as irregular B waves, suggesting an expanded flat. Then we will go in C wave below wave A from October or June 2022. But if you look at the target area for the 20-week cycle target, we see that this red line sort of cuts almost in the middle. So if it really goes above, if SPX really goes above January 22 top, then we only have two options. It's either that irregular B that I mentioned, or the count that I considered was wrong, missed some wave or overcounted some wave, and actually the low in 2022 was a primary fourth wave, and we still have to complete the primary fifth wave for supercycle top. And in that case, this pending peak in SPX would be intermediate wave 3, and we would need intermediate waves 4 and 5 to complete the Elliott wave pattern. Now, which one of these options is going to play out exactly? Nobody knows. But here are some options based on cycles. First 18-month cycle is actually running at 2+ years and hasn't rolled over yet, but could do that any week now, from now up to a couple of months from now. And then the market should really, in a bigger picture, should really go down into, say, October of 2024, where we should expect this 2+ year cycle trough. And my expectation is some choppy trading the next couple of months, because some cycles are going up, some down. But eventually, when this 2-year cycle turns down and other shorter cycles like 40-week, 20-week, and so on, get in sync with it, we should get a sharp drop from somewhere around April to October. Now, we have to watch how that drop would look like. If it is relatively shallow and corrective, that would suggest it would be wave green intermediate wave 4, and some higher highs would be possible. As a matter of fact, there is a bigger cycle peak expected in late 2025 or early 2026. That's where this 2-year cycle should peak again, and also the 4-year cycle, 3.5 or 4-year cycle, should peak around that time too, and should drive market significantly lower into 2027. But one step at a time. So expectation is a pullback into October, and then up into late 25 or early 26. The solar cycle is expected, based on NASA predictions, to peak in last quarter of 2025. And the stock market, based on last 10 cycles or more, usually peaks coincidentally with the sunspot number or solar cycle, or oftentimes actually earlier. So my guess is that this move from October into 2025 would complete sometimes in late 2025. But we shall see. What we are interested now is which path it will take. As I said, if the correction is in 3 waves, A, B, C, and relatively shallow, then we could expect a higher high and actually grand supercycle top or supercycle top in this range 2025, 2026. If, however, we get an impulsive drop down, say from April into October, 5-wave structure, 1, 2, 3, 4, 5, then I expect the black path, where the bounce from October 24 to late 25 or early 26 is going to be again some second wave. If this is wave 1 of C, intermediate C, then it would be wave 2, and so on. We will continue down into 2027. Another thing to note is that technicals are on the weekly chart, and actually, as I said, hourly and 4-hour charts are strongly diverging. So even if price goes up above July high, where actually we have some resistance line, we have this resistance line and this resistance line that pose some challenges to SPX next week. But I would allow for still higher based on this target area, although it's not a must to achieve that target area. It's a probability 70%. The RSI wouldn't be able to reach that overbought area, so we will have still strong negative divergence in both RSI and MACD. So that's it. I expect short term, I expect market to turn down early to mid next week. into, say, mid-December, late second week of December or so. Then a Santa Claus rally in the second part of December. Then again, a nice down into the second half of January, up into early April, and then, as I said, strongly down into summer and October of 2024. Well, that's it. If you like my video, please share with your friends and like it, and follow my channel. Also, you could follow me on X, former Twitter, at this handle, or you could check out my BraVoCycles newsletter that at these links, where I analyze major stock indexes as well as try to identify opportunities in crypto, forex, commodities, bonds, some major ETFs and major stocks like Magnificent Seven, etc. The name of the newsletter is Market Timing and Price Projections, but it's, as I described, much broader than that. And I use a multi-pronged approach of cycles, Elliott wave theory, technical analysis, and sentiment analysis to identify best opportunities. Okay, that's it. And hope you had a great weekend. Enjoy next week, and until next time.